Welcome, everybody. Thank you so much for joining us today. And I really want to take this time to thank you. I see a lot of people coming in the webinar. We will settle down for a couple minutes before we start. Um, but I want to let you guys know this is kind of like a journey how we started investing into apartments, a little bit of journey how investing into how we can build up the 300 units and 27 million US in literally just 4 or 5 years, and it's kind of like a journey, and we really want to share how investor can invest with we talk about RRSP registered funds, can invest in you probably catch on by 44,000 a door, and that's amazing returns at 25% returns. You probably think in mind like, how is it possible? In fact, my first property when I bought it, it was 28,000 a door. I have a video to prove that. I actually have the property. I still own the property. It's called Amy Apartments. We changed it to Spring Bank Apartment. We have investors to this day still investing with us on that property. And yeah, so it's an amazing story. But long story short is we really want to create webinar such as this to share about with Canadian investors how you can invest with your registered funds, invested with your RRSP funds, and we set up the fund structure so that investor can invest into the US apartments, which is very hot these days. I talk to a lot of people. It's funny thing is like I have been investing in apartment buildings since 2018, but I have invested in the US since 2012. And I have invested in real estate since I was 26 years old, so 2006. But I get so many. Lately I got a lot of requests as in, so how do you invest in the US? And it's like suddenly I've been talking all years. I've been talking the last few years, pre-pandemic even, how to invest in apartments. But hey, I've been here. The good thing is I have some experience. We have closed 6 properties. We're in the middle of closing 160 unit, 10 million US in the next 60 days, 75 days. So I have some experience, and I'd like to share. I'd like to share how we're able to find the market, how we're able to close the deal, how we're able to target a deal. Some videos that we actually on the market 2 weeks ago, 3 weeks ago in Ohio. It's my favorite market. It's probably going to be people's favorite market like after this video, because I see 2 Wall Street Journal and apartments.com talking about Ohio and Midwest. Maybe I should be more specific. Midwest and Ohio is talked about how the rent grows, and I have some slides talking about it. The rent grows is number 3, number 5 in and 25 of the 100 city. So long short is I really want to share a little bit of a journey of how we do it, and maybe you can do it with us, maybe you can do it yourself. Hey, the more people who are doing what we're doing, that's fantastic. So so again, we want to talk about how you can build wealth with registered funds today. RRSP, TFSA, LIRA, we using this vehicle called private mutual fund trust, which is nothing new. It's really expensive to create, but once you create it, it's kind of like clockwork. I don't know whether you read the book. It's kind of like clockwork. So with that, investor can tag along, or you can create that structure yourself as well, and to investing into apartments, into even other investment in the US. But I wanted to also talk about the story of investing in 44,000 a door. How we find it, how we read it, how we build the relationships, how we see the comps at 65K a door, and how we see the comp at 750, and we are currently at 490. So we have the opportunity later on, but hey, I want to talk about that, how we start, right? we are Canadian. When I say we, hate to break. So we are a Canadian Calgary-based company invest in the multifamily in the US, and we have been doing this since 2018. We have 20 buildings and 304 units, 27 million asset. And we really believe in the Midwest. So we really do in Ohio. We only do C-class building. We only do value add property, and we only buy property that is undervalued. I think at current market is really important to be able to find those property that's no inventory. You know, I was watching today's Wall Street Journal. This gentleman's, I forgot his name, is talking about the real estate market has picked up again. You know, 10-year yield has come down again. I was talking to my lender, as you all know, the 10-year yield and the 2 years and the 5 years is a blend rate of how we get the loan in the US. So it's good to know those kind of things. It's good to know where the money comes from the lender perspective, because that's going to affect your yield. It's going to affect your loan. So, but long and short is, real estate has not like crashed for the last 2-3 years. You know, during COVID, you know, all of it is history. But without going to do too deep, as in, you know, how our environment and things like that, I wanted to focus on, you know, how we did it and what we did and what is our asset and what is the market we target. So again, 303 units, 304 units. I turned 1 unit from 303 unit. The last one is I upgraded from office, and it's like totally empty. It's like no one. The previous owner of the building, 69 unit, and he used it for himself. And I turned it into a studio. I've been sitting for the market for 3-4 months, and I turned it into 304 units. So there you go. So 27 millions, and then we've been doing investments since I was 26. So that's probably a little bit wrong. It should be what's that? I'm 42 years old, so it's going to be 40, so 16, 17 years now. So how we start, this is how we start. So literally 2017, December 1st, I fly into middle of nowhere, Ohio. I'm a Calgary guy, I'm a Canadian guy. So I got on this contract 24 months later, so 6 building, 48 units. I got it at $28,000 a door, as you can see. It was not 100% occupied. Purchase price 1.3 million. But so, you know, like a lot of Canadian, like a lot of real estate investors, you know, really excited about scaling up. You know, I was still I was still a 37-year-old baby, and I'm trying to learn about how to invest in multifamily, because everyone's talking about multifamily, everyone's talking about US, but not everyone's talking about Ohio and Midwest, by the way. And to be honest, that's what I like. I don't believe in clouding in the market that everyone is playing or bidding, and I don't believe in that. So long and short is, with 4 or 5 years of hard work, we put in new roof, we put in new renovations, 300,000 after we increased the rent from 350, as you see, to actually the rent is wrong, is actually 750 now, and we financed already 4 million. So that is where the market sits, but to show you, that is obviously very good market. We were in the amazing market, as we all know. But the thing is, we didn't stop there. So our journeys keep going. We invested in apartment buildings. This next one is 69 unit, as you can see. We turned in 70 unit to studio. Similar story. We got this at 48,000 a door, 3.3 million, and then we increased the rent, a heck of it, put in over $500,000 of capex, and then reappraised the values. You know, again, the strategy is the same. You know, you find a property that's undervalued, you find a property that has good locations, have good bones, and is under market rent. You know, why I target that? Is because you find the property that have such a big increase. You know, actually the $800 rent increase on here, you can see is 450 that's going in, and then the $800 per right now is at 825, 850. The story is the same, and what I mean by that is, you know, the strategies of going into all this Midwest market that most people do not want to go there because it's not shiny, it's boring, you know, fantastic. Hate to Break is built on totally, the thing is called boring, you know. I believe when you invest in boring stuff like this, which is great because, you know, not everyone is competing with you. When you have so much capital competing for real estate asset from Canada, from US, boring is great. So again, the similar idea, we put in $500,000 and improve that, increase the rent, boom. So we increase the value of the property. And we didn't stop that. We buy the third property. Similar story. We bought at 375 per month. The rents at below market 40K a door, and competition rent is at 800. So the idea of all these properties, so this is the third one, this is the fourth one, and this is the fifth one, sixth one. So this is the last one that we got on 30,000 a door. I know, like this, how can you get 30,000 a door? And it's so need work, we probably need work. So we need to put $7,000 of properties per unit. But that is like 150 units of Class A building next door of this. I have video to show that. Long story short is, it's not about shiny stuff. It's not about how much the market can appreciate. It's about finding the properties that have the like I'm talking about right properties here. Finding the properties have the right appreciation profile, finding properties that you can bring you in from 450 in this case to 750, which is why I did my comps. I show you on one of the slides talking about how we did the comps, and then the value will increase. You buy in the right area, you buy in the right properties in the right market, that the things is just kind of like it would do it for you. So the next 60 days, we have 10 million under contracts, 166 units that is coming on. But I want to stop and here a bit. We talk about Dayton and Cincinnati, and I'm really thrilled, and because years ago, no one talked about Ohio, and no one talked about Cincinnati. I know we all want to be right. I don't want to be right. I just want to show you what happens. Cincinnati is number 3 in terms of rent. This is, I believe this is today or yesterday, and this is on real page. So talking about Midwest market have the most in terms of rent growth letter. So this talk about. So number 3 is Cincinnati, which is where we invest, and Columbus, 6.5. So number 3 and number 5 is in the Midwest. Well, actually, they talk about actually top 10. So Indiana is in the Midwest. St. Louis is in the Midwest. Chicago is in the Midwest. So you have 1, 2, 3, 4. Kansas City in Midwest. 5 of them or 6 of them is top 6 is in the Midwest. So which is exciting because that's where we invest and where we believe in years ago. And we saw that that's a huge value gap, and that's a flight to high yield cities like, you know, Cincinnati, like Dayton, which is where we have 304 units. So next page talk about Dayton. So Dayton is number 25. Dayton years ago when I invest, it was also consistently over 120 rank in here. This is Wall Street Journal, realtor.com. This was consistently 100 plus 90, you know, the highest in 1, 2, 3 years ago. It was 60, I believe. And the story is the same. Do the right market research, and then the stuff will happen for you. And I will show you what I mean by that as we keep going on. So enough about the Midwest, enough about who we do, what we do, but I want to talk about the story of investing 44K a door, right? 44K a door. It comes down to, I believe, after 6 properties, after 300 units in the market that I don't play it in the whole US market because I believe US is really big. Canadian is really big. Canadian market is really big. I believe in subset of the market that when you target the market, you find a niche and you stay on until you get to decent size. So it comes down to right price. You know, when the market value is 67K a door, 75K a door, right opportunity. And and I think I have a video to show you. So this is the property that we on contract, we're closing in 30 days. So let's see if I can open this. So stop. So let's see, let me share this. Here. We can see that. So it's 40 unit. The kitchen is 5 years new, and for 60% of them. But this is what I'm talking about. When you find the right property, it will do it for you. When you find the right property, have 5-year-old kitchen. When you find a property that is 44K a door, and everyone else is 67, 65K, 75K a door. I believe in buying property that has tremendous amount of rent growth and is tremendous. We're talking about 30% below the competition price, and I believe that's fair. I don't believe in buying property that hoping the appreciation will go. I don't believe in that. You know, that's market does that, but I don't believe in that. So let me see if I can come back to share, because that's especially, I think it's really important at this kind of market, meaning that we have a lot of uncertainty. You know, Fed, we don't know whether how much they're going to continue to go up raising rate. We know that they're close to the top of that, but you know, finding market, investing market that have high rents to price ratio is going to protect your ass. It's going to protect our ass, because you have the rent to have high debt service cover ratio. Basically is the NOI over the net NOI over the debt. You have 1.3, 1.4, 1.5, 1.6 all day long. You can protect your debt service. But at the end of the day, we all know the market will come up. We all know that. But can you stay afloat for the few years, for 2-3 years, and continue to expand? That is the key. And that is why I always like to be boring, and that's why I always like to be investing in Ohio and Cincinnati and Dayton, because those are boring market. You can pay rent, you can pay the debt service in the meantime. So you guys probably want proof that's in why the market is like 67 a door. So I'm going to open it. This is my competitions. So sorry,
everyone.
So I'm sharing. Here we go. Share.
A little bit of a sales comm of the property that literally just logged on contract and 40 unit in the door. This is a 4 unit, small 4 unit, but it's exactly the same. So the bad part is this is fully gutted. Selling 65K a door. The good thing is actually this is also 65K a door, and comparing to what we have just locked it on 44,375, this is a good comparison. So it also have 4 unit, 2 up, 2 bottom, and you have 2 garage here. And what it actually tells me is, so that's funny. That's all totally empty window up there. The good thing is we locked on a property at 40 unit at 44K a door, and this is selling for 65K a door. For you get the 260 actually. I have a listing here down below. But long story short is, when we doing comparison of determining what is good buy and what is not good buy, we always look at the properties surrounding us and see how much they're selling for, how much they're asking for, and give us a really good potential as a gauging as what is the market is looking at. So I don't know if this is going to sell at this price, but what it's giving me is a really good gauging as in what kind of deal that we're locking in. So, and what is the base price that we're going to compare against? If we're comparing against this, we either win all day long or you win all day long. Until then, and thank you so much. And yeah, just.
So that is the reason why I say you have to do your market competitions, right? When we go in Ohio, so obviously we do our market research. We know that that meets our boring criteria of investing in market that 28,000 a door at the time that we're going in, and then we consider buying it at 30,000 a door, 40,000 a door. All the property that we buy to this days is still under 50,000 a door, believe it or not. And because I don't believe in overbuying, in bidding with my competitions. And this is the next slide. Within that building, I actually got in the hustle and booked a meeting with a refereeing agent. She let me in. Jennifer let me in. Thank you so much, Jennifer. And I take a whole bunch of pictures because I want to do the comps. I wanted to make sure that whatever I invest, whatever my investor invests is protected. So they're investing in, the other people investing in like, this property, I truly don't think they're going to sell at that price. But the thing is, meaning that they have a lot of work and they're asking for that. So meaning that the property that I am bidding, I'm investing, have a lot of protections against property like this, 60, 70 door in the neighborhood. So again, it's come down to finding the right price when the market is a 65, 70 kind of door. So, and the right opportunity, right area, well-maintained property. So I'm talking about 50% increase of rent. And I want to try to show you. This is the property outside. It's a 10 4-unit building, and it has 2-story, 10 building, nothing fancy. The inside looks great. 1 bedroom, 1 bath, 40 unit, 650, 600 square feet. Our current rent is 490. And I want to show you this rent roll because I actually did show you. So this is a rent roll, right? It's nothing fancy again. Rent roll average 480 average right now, which is amazing. The market is 750. So when we look at opportunity like this, I don't look at opportunity that is only $100, $150 increase of rent, because that's not enough to provide, number one, good return for investors, right? Number two, it's not safe enough. When we bid in the properties, when buying properties, it's not safe in my opinion. I always buy properties that, when I'm going in, I know that's $250 increase of rent. This is almost $260 increase of rent. And I know 5 years later, that's going to be $300, $400. And the reason why I did it, because it's about underwriting conservatively. And you as investors, I think you should also underwrite your deal conservatively. You should always compare, you should always work with investors that have that kind of mindset, because what it means by that, when the market will change and it's always challenging, like today, it's always challenging, even middle of COVID, 2021. So when you're going in a market like this, when you buy in property, have such a big increase of rent, you're protected anyway. So this is the area. So this is 10 buildings. You see that 4 buildings on one side, 6 buildings on the other side. And but it's come down to the right executions, right? So the rent will not just pop up by itself. Actually, this one may did a little bit, maybe from 490 to 650, 625. But we also need to make sure that so after 300 units of renovations, so we know what to spend, how to spend. So we budget just under 300,000 of renovation budgets. That's 100% from the lenders. So why I did that? So it's come down to right execution. You, at the end of the day, you need to make sure that you do what is necessary. So we find out that we need to buffer some money for the roof, and we need to buffer some money for the landscaping, and then units. So that's how we find the deal. To be honest, ladies and gentlemen, that's how we find the deal. More on the competition. So again, this is nothing fancy, right? So I just like so this is Renometer, and that's like myrents.com, and that's like a few others. And you can go to apartments.com, you can go to Zillow.com. You can find the neighborhood rents, but this is really nice, right? So, and then 750, 716 is the average, 750 as a medium. And I did that even before I show up on to be honest. I answered this question to my broker, because I know the brokers for like since 2016. So I answer all this question, but about the rent, about the comps. But at the same time, I don't leave it to them, because my investors and my stake is protected how much work I do. At the end of the day, people who invest in passively, they rely on people like myself and many others to do all this work. So what is the average rent? 716, 750, so 775. So depending on the inside. But what this tells you is in the neighborhood of the market, the rent is not going to be 600, it's not going to be 550. So it's very important. So going in, not blind, do all the work, that's what we did. And I walk the comms, or as I show you, I do the video, and I actually I walk the comms, but I take the video to show people, hey, this is how you do it. And I actually walk out of the rental office and get an idea what is the rent that's going on there. But I don't want to keep talking about option. I want to talk about how we build wealth with registered fund, with RRSP, with TFSA. Because since last year, we are working with investors that have Canadian, I'm talking about, have RRSP money, have TFSA money. They don't want to invest in TSX. They want to invest into paper stocks, but they want to invest in hard assets. They want to invest in apartments, maybe into the C-class building, into opportunity to have good, great value add component like the one that we're doing right now. So the question is how? So we partner with Olympia Trust since 2022. So we have, so that the reason why we partner with that, because Olympia Trust investor can create the self-directed account, and they can create the self-directed RSP account, self-directed TFSA account, RIF, Lira. So basically, so why we partner with them? Because traditionally, it's really hard for investors investing from Canada to invest in the US. The only they can do is without a correct structure, without a company that like Olympia Trust to looking at the right structure, because they don't just invest with people. I'm talking about Olympia Trust. Make sure that our structures is correct structure. When we build that, we build the structures after spending a lot of capital to do that. So with that, investor can invest the RSP money or TFSA money into their put it in the self-direct account and find that. And how do we find that? So as you can see, this is from the Olympia Trust website. This is my personal account. So when I search that, Hater Break, so this is Hater Break Real Estate Trust, Class A, which basically is the Canadian series, or investors who want to invest in USD, which is the Class A series USD units. So they can find it from their own Olympia Trust portal and then invest. So again, investor has done it. We have raised capital and work with investor to invest in our deals previously, and we find it pretty seamless. After we do the work, and we're so loving it. We did that in 2022, and want to continue to doing it. But I touched on a little bit of this right market. What is the right market? It's come down to this. Years ago, no one's were believing us that Cincinnati or Ohio or even Midwest market can provide such a rent growth, 7.9 year over year, and Dayton's number 25. And to be honest, Dayton is a treasury market that have just 800,000 people, and that is the market. As a high inflation coming in right now, it's not going anywhere. So real estate prices has correct a little bit, but it's not going anywhere. And you as investors and we as investor, we need to make sure that we're protected, and you need to go to where the rent growth is, and this is really self-explanatory, I believe. Cincinnati, why we invest in Cincinnati is exactly boring again. But I'm going to show you what is not so boring. What is the news that's not so boring? Amazon Prime is the Amazon arm of the Amazon company. We all know who is Amazon. So they have the hub, 1.5 million in CVG since 2018, and they have built that. No one's know about it is because it's not passenger airport, it's cargo airport. So long and short is there's only one Amazon air hub in the US, and Amazon built that. So that shows you why invest in that, and we continue to love investing in boring city like this. But having said that, I think I speak really fast today. So questions, and feel free to ask me questions, and then I would be glad to show you my answer. But long short is that's how we do it, to be investing 44K a door, to be investing in market that we believe that is boring, stabilized, have substantial growth, and we are loving it, and we continuously investing it, and hopefully to be working with people and ladies and gentlemen, ladies and guys like you guys, and continues to be rocking it in the market. Okay, thank you so much, and so let me know if you have questions. Otherwise, thank you so much. Thank you everyone for coming. So I see two questions. Thanks, Paul. The best way to research market is to start online. And that's two publications. I think that's one of them is called I just come best performing city. They have a year to, so if you search best performing city 2022, there's a Milken report, Milken report, Milken Milken report. Also, so you can find them and just Google Milken best performing city 2022 or 23, and they have every year they have a new one. So that's a good way to start, and start looking at the market similar chat, start looking at other brokers' website and CBRE. So that way, and they always have like market highlight and telling you what market is performing well, market is not performing well. I will start from that. How property is managed. We are creating our own property management company, Rocky. Thanks so much for questioning it. So because we are approaching 460 units after closing these 3 properties, so we're building our own property management starting next week. Actually, I'm flying into Ohio myself and building my own team. So but right now we have property management, third-party local property management company managing properties, and that's how it's being managed. But until then, if you're not doing good size, if you're not 2, 3, 400 units, it's really hard to do it. So thanks for the questions, Rocky. I'm living in Jobin. I'm living in Newfoundland, Canada. What's your opinion to invest in NL so Newfoundland real estate, especially in St. John? I would love to give you my opinion on that, Jobin. I'm just being honest with you. I don't invest in the market, so I can't really comment too much. But I would tell you what I think when I'm investing into why I invest in the US. You know, I don't believe in. I think it's really risky if you're investing into market that have smaller market, and that's why usually the cap will show, right? The cap, the rents to price ratio will show. And the way that why I invest in the US, because when I still invest in 7, 8 cap properties, I'm still investing into area that have like 800,000, 2.4. Cincinnati have 2.4 million people. So I love investing in people that have like huge populations of tenants, huge population of working class tenants. So I don't know for St. John's. I don't know St. John's. Sorry about that, Jobin. But I would start to comparing when I investing into A market comparing to B market. Is the risk I'm taking in, especially what I've just mentioned about low populations, and then especially city that have 1 or 2 or not enough employer. If one industry, for example, if I know a lot of historically, a lot of city in the east, just like in Calgary, is hugely affected by oil and gas industry because they're so focused. So I gotta be risking that. You know, I'm getting higher rent, right? I'm getting higher cap, lower price per door, but I need to balance that, right? I hope that answers your questions. Rocky, thanks for follow-up question. How do you determine the amount of capex for each building? Do you have building condition report performed? Yeah, so we are doing appraisal report. I do. So very good questions, Rocky. When I go in, so actually let me just minimize this because I didn't share this. So share to answer questions. This is how I do my let's see. Sorry, stop sharing. I show you because when I go in every single unit, right, and take pictures. Just give me 1 second. My apologies. So this is the inside. Share. This is the inside of the properties. Hope you can see it. This is the kitchen. So I take pictures of every single one of the unit. That's how I do it. Obviously, I do appraisal, I do property inspections, and the appraisal we do the inspections that determine the values. But it comes down to knowing your market. I got on this 44 unit Adore because I got on contract within 2 hours. Because what I'm trying to say is, when you see the opportunity, you got strike it. You got to know when to strike, and if you don't know the market, it's really hard to strike. I've been in this market since 2016, so I know when to strike and when not to strike. It's come down to that. It's like when you see the opportunity, you're not gonna. So this is my way to tell you that is obviously you can't wait for the property inspection report before you can make an offer. But that's how I do it. And I determine the amount of capex because I actually know how much to turn a unit, right? How much to turn a unit is between 5 to 10 G a door. Like in my market, every market is different. Every sub-market is different. And know how much it's worth, how much it is for after 300 units, you got to know all those things, right? Otherwise, why invest with me? So at the end of the day, it's about knowing your background numbers. And then at the beginning, I got to say that at the beginning, I bring my contractors. Another reason why people love working with me, I'm talking about brokers. I was asking, so why why we can set up the meeting so quick? Because the broker tell me is like, because you don't bring in the whole team. A lot of investors, when they're starting into it, they're bringing the partner, which is 5 investors, and then it's like the property manager, and then the inspector. So you may have like 4 or 5 people. What is stopping the deals happening is you want to make it smooth, and you want to make sure, because at the end of the day, it's good to protect yourself. But at the end of the day, after you're doing so many units in the same market, you should know how much it costs for the kitchen. You should know how much it costs for the bathroom. You should know how much it costs for the roof, plus or minus 20%, and then you work from there. And that is why you take the pictures, and that is why you build a buffer. So you got to have a buffer on your budget. So that's how you do it, right? And it's come down to I guess it's come down to experience, right? No one's know how to do it first time. And no one certainly know how to invest in US. No one certainly know how to do in TFSA, RRSP. Like, someone got to do it, and that person is me. So, or maybe you. So yeah, that's how we do, Rocky. So hope that answered your question. So I think that's probably it. I will leave it. So I think someone just joined us. So Rocky, to answer questions, we have not expanded another market because our team is located in certain market. The reason why we're able to continuously closing at 40,000 doors because we know those people, and as every market have good deal, and it's come down to, can you find those good deals or not? At the end of the day, what is the relationship with those people? We have another property that we lock on 46,000 a door, all 2 bedrooms, right? And we're doing a webinar, 32 units in Dayton. We're doing webinars in a couple of weeks. We're closing that because we know everyone that properties, side topics here, but that properties so that property 2 months ago in February exactly, they are selling at 1.9 million, and we got on contract from 1.5. And the questions people got to answer is, why are you able to lock on properties $40,000 below 2 months ago? Well, at the end of the day, you got to show the people. When talk about the brokers, they can present you your deal, and they can present other people's deal. And that's why it comes down to knowing the market. It comes down to, it's not about, because every market can make money. It's come down to, can you find those property? At the end of the day, you can find properties, good deals. And, if everyone's selling in Toronto 4 million, I guarantee you can find the properties at half price in Toronto or some other place. Doesn't matter. But the thing is, like, are you the person? Are you that person's to work all those work, to build a relationship with the brokers, to have the relationship, to be able to get that properties? We are that persons in Dayton, and we're that persons a little bit less in Cincinnati. But it comes down to credibility. It comes down to the people knowing you and present the deals to you. So hope that answers your question, Rocky. So I will just leave the video off for a bit, and then hopefully everyone's have a great night. Thank you so much. Thank you, Rocky. Thank you so much for everyone's joining us and taking the time to listen to our journey, how we build apartments portfolio in the US as a Canadian guy. And obviously this is doable. Years ago, I'm gonna end this years ago with a story. Years ago, remember when we go into Ohio, no one's believed that, right? Because it's such a boring market, and we love that market. We love the market. Even when we bought it $28,000, everyone's saying that we are crazy. It was so expensive. Hey, you want to actively invest in it, go buy the 20-30 unit buildings that's out there. You want to be joining us and in this journey to build, continues to build passive investment using RRSP fund, TFSA fund. We're here. We love to working with you guys and girls. So thank you so much for everyone joining us. Hope that is helpful. Hope that is show you a little bit of blueprint as how we can start, how we can invest in the US. Hey, the US market is huge. So come join us as a Canadian person, investors. Thank you so much, everyone.